What is going on, everybody? Welcome back to another episode of That Makes Zero Sense. So, we're going to keep this one in a similar format to the last few. I've been fielding some listener questions over the week. We've had a lot go down in the markets this week. So, there's plenty of good questions, good, bad, ugly, whatever they are, send them in, and I'll do my best to address them on the show. So, without further ado, let's jump right into the list of questions I have here and have a great episode. So, question number one says, what is your read on the price action in Bitcoin? Let me be the first to say that I don't have much of an opinion on Bitcoin and crypto as it relates to being a asset. I've never understood it super well. I mean, I get the basic tenets and mechanisms in which it derives its value. I've never been a huge fan because when you purchase bonds, for example, you're getting a fixed coupon payment. And you can derive value through that. And if you purchase value stock that maybe pays a dividend, you can maybe value a dividend paying stock based on the dividends that it pays. So there's ways of deriving value in so many other assets. We could talk about not just financial assets, but let's talk about real estate. Let's talk about antique cars. There's so many assets that exist out there where there is some intrinsic value that you can put a number on. You can come to a conclusion on what the value of that asset is. With Bitcoin, um, in my experience watching it trade, I mean, obviously it has its use cases now in the world where you can use Bitcoin to purchase things, and people want to argue that it's a store of value. I don't know that I can say that that's true because of the volatility in its price. But let me answer the question. What do I make of the price action in Bitcoin right now? I've always viewed Bitcoin as a bit of a risk proxy. You've heard me talk about oil being a geopolitical risk proxy. I think Bitcoin is just market risk proxy. I think when the market gets spooked and you see a sell off in equities, you tend to see a sell off in Bitcoin. And when you see markets very exuberant and very bullish, people tend to flock to Bitcoin. Frankly, I don't know what the reason is why they're flocking to Bitcoin. They're just choosing an asset that they think that could generate a giant return. So this price action Bitcoin, the only thing I'll say about this is it's when the whole debasement trade was going on, that was a place people went to hide. People also went to go hide in silver and gold, and those assets got way too bullish, way too bought up, and now you're seeing a little bit of that unraveling because there was so much retail driven frenzy towards the tail end of that move. I think it's no different in Bitcoin, and I don't have a whole lot more to say on the price action in Bitcoin as it relates to that. Let's move on to question number two. Lots of talk on software. I hate to make you talk about it 3 weeks in a row, but what are your thoughts on the group and Microsoft specifically? I'm going to continue to defend Microsoft a little bit. I do think the price action in software has gotten to oversold levels, but I would put a asterisk on that. If the next move in the NASDAQ is down 20 points, you can bet your top dollar, in my opinion, that that's probably going to weigh on a lot of the bigger weights in the IGV, which is the software ETF. Names like Palantir, Oracle, Microsoft, Adobe, CrowdStrike, Palo Alto Networks, Sentinel One. These stocks are probably going to get hit if the next move in the market is lower. So, yes, while the market's been ripping prior to the last 2 days and software has been lagging, I don't know that I'm ready to jump in full fledged on software at this point. I'm definitely starting to purchase some names and I'm starting small in case the next move is lower, but I don't think it's a bad idea to be long some high quality software names right now. As it relates to Microsoft, it's a high quality business. They have a strong balance sheet, and I like that stock. I like that name. It's I don't know if I'd be buying Oracle or Palantir. Those are definitely shakier. Palantir is extremely expensive on multiple different metrics. And Oracle, I don't know that they have the balance sheet durability that a name like Microsoft or some of these other cybersecurity stocks do. But we can't ignore price action. Obviously, software has acted very poorly and closed on lows today. Microsoft closed on lows today. These are some of the biggest stocks in the entire market. So it's something to pay attention to. And again, it's not investing advice. I'm not telling you to go and load up on Microsoft because it could go down to 350. We don't know. So let's move on to the next question. What is a tool you use to eliminate emotions in your trading and make more rational slash logical decisions? I'm going to debunk that a little bit. There's no way to eradicate the emotions completely. We're all human beings, and when you get scared of something, doesn't matter what it is, you're going to feel the fear. And you can't just snap your fingers and say, I'm not going to be afraid of that." If something genuinely scares you, and you don't want to be scared of it, it's pretty difficult, if you've ever been scared in your life, if you've experienced that emotion, to just talk yourself out of it. Now, do I feel feelings when I'm trading? Anxiety, stress, fear, greed. Of course, as a human, you're going to feel those emotions. But as a trader, I think one of your most important jobs is recognizing and being mindful of those emotions when they occur, when they come up, and recognizing it, pointing to it, and saying, "That's fear." Or "That's greed," or "I'm thinking irrationally because I'm feeling this emotion." And it's really difficult to do that, especially if you're new trading, because you've lived your whole life listening to your emotions and letting them guide you, keep you safe. That's how we're wired as humans. So to point to something that makes you feel afraid, buying a larger chunk of stock than maybe you wanted to, even though it's a great idea and you should be a little bit bigger in that name, pointing to something that you're afraid of and saying, "I can't be afraid of that. I have to just be unemotional and trade this," is a very difficult thing to do. And so something that I do when I'm in a trade or and it's going against me and maybe it hasn't hit my stop yet, but I'm getting worried that it will, I point to the fear. Quite literally, I'll write it down on a paper. "I'm feeling scared right now. How come?" "Okay, well, I'm too big in this position," or "This has been moving against me for the last few hours and has shown no signs of turning around." Okay, now you've written it out. Now you've identified it. And then you can move on to step two, that's identifying what is the irrational decision that you're making as a result of the emotion that you're feeling. And once you start to type this stuff out or write it down or even point to it in your head, I've done it for so long now that I'm sitting here and I know that I feel something and I'm like, "Aha, I'm going to make a bad decision right now because I'm feeling this feeling." Once you get to that point and you identify it in the moment, it sort of takes the power away a little bit. If you can be vulnerable with yourself and say, "Oh, geez, I'm feeling afraid right now," it instantly reduces the power of that emotion over you by, I want to say, 70%. And maybe you retain a little bit of the fear, but just enough anxiety that you can be locked in, you're trading well, and you're in the zone. It's a difficult thing to do. And me saying it to you in this podcast format, it sounds very easy on paper, but in practice, when you're truly handling money and you've got a position on that's 500,000, $1 million, it can be nerve wracking. So hopefully that helps. I don't know that I explained that in easy to understand terminology. I did my best. But I would say experiment with pointing to your emotions, like genuinely saying when you're feeling anxious, "Gosh, I can feel that anxiety. My armpits are sweaty, or I'm shaking in the chair, or my knee is constantly bouncing," or identify those ticks that you have when you do feel certain emotions. So they cue you and you can say, "Aha, what's this going to cause me to do? Let me just identify it. Let me sit in it for a second, accept it, and then you're re-locked in." If you don't address it and you kind of let it fester in the back of your mind and you think you're fine and you lie to yourself because you're too worried about being vulnerable with yourself or admitting to yourself that you're feeling an emotion, you're going to be led down a bad path. You're going to make irrational decisions. You're going to sell a stock when you maybe should be buying more or sitting there for an extra second. Or maybe you see some price action that is only occurred for a minute and it doesn't really mean anything. Maybe you're pressing a stock that really shouldn't be pressed and maybe should be cut because it's going against you. But that's a result of a failure to identify emotions. And so, to answer the question, you're not eradicating emotions ever. They're always going to be with you, they're always going to be a part of your trading. But the master traders, and I'm not saying I'm a master trader, I'm just saying that I'm somebody who's lived with this phenomenon for a long time. Somebody who does this for a living for many years learns to adapt, accept, and trade with their emotions in harmony. So let's move on to question number 4. Why do you think Google traded down initially on what I thought was a great quarter? I am so confused. So this question came in last night when Google was down initially on the quarter, and I think the reason for that was the capex number. There were a couple misses on some of their core business stuff, but the capex number was gigantic. I want to say 150 or 160 billion dollars for 26. That's monstrous, and I think the market is beginning to tune in. Throwing hordes of money at AI is not being rewarded by the tape anymore. That was the playbook in 2025, and it does not feel like the playbook in 2026. You need to show some evidence of ROI. And at the time of this recording, after the Thursday close, Google actually closed out the day pretty well. I didn't punch up Google into the end of the day. I don't know if it closed green or unchanged, but I think the pattern, the price action was very nice there in the latter half of the day. And I think that's because there was commentary on the call that Gemini is possibly taking share from OpenAI. And I've said it for a long time. I've always preferred Gemini over OpenAI. That's a personal preference, but it's definitely interesting to see that. So that's a little bit on the Google quarter. Those are my thoughts. And it's interesting to see that Microsoft is being sold off, Google, Meta are being bought. You're truly seeing a bifurcation in who's seeing or beginning to see some ROI on their spend and who isn't. And I think Microsoft is also getting caught up a little bit in just being a part of being a software name and AI potentially, or the fears at least of AI taking away from software names. Let's move on to the final question. Question 5. I live in Alberta, Canada. Hello, fellow Canadian. I don't know many people smart and involved in the markets. What are people you know saying in New York about everything going on right now? That is a question that would take 45 minutes to answer. And I also don't know what you mean by everything going on right now. I'm going to assume just in general, let's say Bitcoin, silver, gold, the market. Um, there's a lot of talk I'm hearing on software. It seems to be that's a pretty big focal point. The oversoldness, for lack of better terms, in software is being talked about a lot. There's a lot of talk on AI related stocks and semi stocks, data center related stocks, energy to power data centers, the stocks that are involved in that business. These names are certainly losing a little bit of the air that they once had. They're not trading up for absolutely no reason for really small, dumb headlines. They're actually maybe bumping up a little bit and then selling off. Strong earnings reports are being sold. There's tons of sell the news events that I've seen in that space just this quarter alone, and we're I want to say maybe halfway through earnings season, maybe not even half yet. There's still so many more companies to report in the coming weeks. And I think a bigger thing that I should touch on is there's very clearly, it's evident to me that there is a giant rotation happening. If you look at what XLP and the staples stocks have done, they've performed very well. If you look at utilities, they perform very well. Bonds today performed very well. There is a clear rotation out of the Mag 7 and the traditional AI and obviously software into some safer stocks. There is I think, in general, just a little bit more fear in the tape. And it's funny that we're recording this after the Thursday close this week, February 5th, because today I felt that the most today. And so to answer the question, what am I hearing from some of my friends in other parts of the world who talk markets or know markets? If I had to sum it up in software, it's definitely fear. And across risk assets in general, it feels like the relentless bid in the tape is no longer there to support equities like it once was. For the last year, a popular phenomenon has been buy the dip, buy the dip. I'm not sure that this dip gets bought. It feels a little different this time. But then again, I've been saying it feels a little different this time for a year. So I might be wrong. But that wraps up the questions. That's all 5 questions that I answered today. Hopefully, those answers weren't too awful and there was a little bit of insight. If you enjoy the show, go check out TikTok, go check out Instagram, and our YouTube. We have a bunch of shorts I'm posting every day talking about stuff that I'm seeing in markets, stuff that I'm trading. We'll be back again next Friday with another longer form podcast drop. I'm super pumped for that. And if you ever have trading questions, emotion questions, I can promise you I've been through the thick and the thin of it and have journaled after every single trade that I've made for the last 5 years. I think I've got 10 journals now full of stuff. So I have explored not everything. You can never explore everything, but you can bet your top dollar that just about everything I've explored as it relates to my emotional framework. So maybe I can offer a little bit of guidance there at times. But with that being said, take care. Have a great weekend. At the time of this posting, it'll be Friday. So, yes, have a great weekend. I'll see you next week. And remember that that makes absolutely zero sense. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.